So before the short break, we were talking about what actually can make um, the situation worse for economic growth. We indicated that we're concerned about debt, and that's why, sort of in this current crisis, there was significant discussion about what to do about housing-related debt. We wanted to stop folks from losing their homes, so we passed laws in various places, and even the president put in place some modest regulation about evictions and foreclosures. Uh, so, uh, the issue is we can stop folks from being evicted from their rental properties, but if the landlords have mortgages, how does that work? In that period of time, do we need to make accommodations for them? And how does this money get recovered? This is all sort of part of trying to fill that hole. We also wanted to talk about uh, falling wages and prices. If you think back to the law of supply and demand in the early part uh, of the course, we indicated that one of the things that would shift demand is a shift in income. And during a recessionary period or a depression, income of necessity is falling. And as a result, there's less demand for products, and that could create falling prices. But if prices fall, wages are also going to fall. And so once again, you get this self reinforcing downward spiral that will take the economy and downward and keep it mired in a deep recession or a depression. So we want to guard against that downward spiral. Increasing interest rates will also make the situation worse. So there have been instances in history where the central bank, the Federal Reserve, and in other countries, similar kinds of incidents with their central banks of increasing interest rates at vulnerable moments that helped prolong or deepen economic dislocation. This is certainly the case in Europe, and as that instance we talked about with Greece and Spain, where the vicissitudes of the debt instruments that those governments had to issue meant that soaring interest rates required them to dedicate a bigger percentage of their government budgets to paying down debt, which again makes the situation worse and helps to discourage folks from investing and consuming. So, what should we worry about during these particular times of crisis when economies contract? Well, one thing we should worry about is filling the hole in demand. How do we go about doing that in such a way that it's uh, constructive for the economy in that it helps sustain employment and it helps sustain wages? One thing we also have to put at the top of the list is meeting human needs. The basic needs: food, shelter, medical care. How do people meet that? We have a situation right now where 26 million people have filed claims for unemployment. There may be many more who have lost their income or are unemployed. We've put in place a system for the first time to allow independent contractors, gig workers, to apply for unemployment compensation. It's not entirely clear how well that works. Our medical care, during a time of crisis like this, we get more demand for Medicaid, which is the federal program for health care for folks of limited means. Folks are also getting shifted who previously had health care coverage through their job to COBRA. There are lag times, it's difficulties. And these are significant concerns. Food security is a huge concern during this period of time. It's very difficult to get to stores for many people. And once you're there are limited supplies of items. And we see stories over this last weekend about disruption in the food supply chain because of the spread of this illness, particularly in meat packing plants. So we need to make sure and take aggressive action to provide food security, particularly in light of the other sort of mismatch in the supply chain for food, which is that significant portions of the food we create is designated for institutional use. So schools, the universities, restaurants, hotels, etc., have big demand for food, which is packaged and produced in a certain way. That demand has disappeared, and there's more demand for food at the retail level, and we need to find ways of sort of properly aligning the need with the supply. One thing to worry about is whether it's attractive to borrow and invest. And here, in investment, what I'm talking about is economic investment. So, for folks to buy homes, for businesses to move ahead with expansion and building plans, we need that economic activity, as well as the economic activity driven by government's need for social investment to maintain infrastructure or expand infrastructure. We need to make sure that can continue even while we try to deal with the medical fallout of the particular crisis. We also need to worry about excess speculation through easy capital. Interest rates are at historically low levels once again, and the Federal Reserve is taking even more aggressive action to help provide liquidity to financial markets than it did under the last crisis. And we saw some problems from other parts of the world where it's easy to borrow money at a very low rate in the United States and then invest it in some other part of the world to get a higher rate of return. And we need to be carefully watching that as we go forward. What shouldn't we worry about? U.S. government deficits and U.S. government debt. These are the last things to be worried about right now. It doesn't matter how big the U.S. government deficit is for this fiscal year and next fiscal year. The most important thing is meeting the human needs of our population and helping the economy to recover by patching the hole in demand, which only really the government can do in the short term, which means that we'll be running large deficits, both because we are spending more to meet human needs. When we have a crisis like this, unemployment's going up, folks applying for social insurance benefits is going to skyrocket. At the same time, that tax collections are going to drop. Tax collections are based on income-related activities, so your wages pay payroll taxes, your wages pay income taxes. To the extent that there are capital gains, there's capital gains tax. To the extent that corporations make profit, they pay a corporate income tax, which is quite modest. So you've got expenses going up and revenues going down. You're going to have deficits, and it really isn't something we should worry about all that much right now. And as such, there'll be more need for U.S. government debt. The government doesn't necessarily need to do it this way, but the way that we do it in the United States is that we issue bonds to cover the deficits, and that those offerings are going to increase. The Federal Reserve is basically taking the other step of buying a lot of that debt from people. So it's taking that debt out of circulation. At the same time, it's being issued much more heavily. So these are some thoughts today on the causes of economic contraction, downward turns in the business cycle, what to worry about, what not to worry about as we go through that process. And I'll be back tomorrow night with some more, but in the meantime, it's kind of a gloomy Monday here, so I thought I would play a song about Friday from The Cure.